Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. In our weekly report, we said actually two major conclusions that we have made. First of all, we think that the rally on the gold is not a long-term bull trend and it's a bit artificial. It's just a byproduct of the Fed action on the market of the interest rates, where they just hold and control the long-term interest rate and doesn't acknowledge the inflation. It actually is growing. And this policy provides some support to the gold because gold has ability to rally as its rivals, which is the bonds, stands at the low return and low yield. That gives some advantage to the gold while inflation is growing. That make the product of the artificial rally on the gold. At the same time, this rally, we think that short term is just a retracement of the starting of the bear trend on the gold, and that makes us to be very careful with any positions that we are taking, at least in the long term. In the shorter term, as we said, the market has completed all conditions that we have needed to let us take the position. In fact, you can see with this recent recession, market indeed is creeping higher. Next destination point, we said it should be 1923 is the first fib level that we have here. So actually it's a major fib level from the top, major 618. Potentially it might be the XOP 1950. So they stands relatively close. It's a company that the daily ever bought. But first is of course 1923, 1925. That's the area that we're watching for. It's a potential destination point. The grabber that have been formed, well, it was really special meaning. On the weekend, it was useful not just because of the target, but mostly because of the confirmation of the bullish sentiment that market stands in the market. But currently, you can see this market is moving above the previous top. The grabber mostly has been completed. The one important moment that we need to take into consideration currently, guys, is that market should not form any deep retracements. On the Consumer Price Index report, we already saw the drop. Reaction on the market here, right back down. The market is moving higher and it stands now at the resistance currently, not at some important target. We should not get any significant pullback. That's why for trading, we need to use just a range starting from the grabber's lows, from the PCE lows, right from here to the top. So I have shown you in this follow time frame chart. So that's what's important. Market currently is forming some kind of the rising rectangle channel. Yes, we have the divergence that we discussed as we're coming to the major 618 resistance area. And that lows are most important. So market should not break it to the downside. If it will break it down, it will put under question the existence of the short-term bullish context, bullish sentiment. Right now, gold feels some difficulties with upward continuation, because if you'll take a look at the interest rates chart, and I will show you right here, this is 10-year yields. You could see we have a bit different performance. This is also follow time frame chart. While gold is creeping higher, interest rates are also creeping higher. Yes, it might be the flag, bearish flag before a downward collapse, and that will be supportive to the gold that market to complete more, maybe even a 1950 target. But right now, gold stands under pressure as interest rates also shows the upper performance. And that doesn't let market, to the gold market, proceed higher and complete the target around 1925, 1930 area. So it means that currently today we will keep an eye on a possible pullback. Unfortunately, we do not have any clear and bright patterns that we could use here. We have to control just the channel and the major level here. On the hourly chart, I do not see something really special. So this is the levels that we could keep an eye on. Most important is, of course, 1880, the lows of this index report on Friday, and the grabber But also that's two levels that we could keep an eye on. So maybe some patterns will be formed. Once it will be formed, we will make the decision. Maybe it will be useful or possible for taking the long position again to one of these levels. But currently, with this recent jump within a couple of sessions, you can see market feels some pressure and stands in a very slow and choppy price action. So right at this moment, well, I don't see some clear patterns that could let us to take position immediately if you haven't taken it previously. So it would be better to wait and see when the interest rates will turn down again and the market will reach maybe one of the support areas where we could get some patterns for upward continuation. So that's our current view on the gold.